Holy.
Alex Karp just joined Davos 2022, the World Economic Forum, and really dropped some gems in terms of Palantir for us investors. Here, I share the best clips for you with my analysis.
Spoke with Palantir CEO Alex Karp in an exclusive interview. Palantir is trading below $8 a share now. Year to date, you can look at that stock and just how far it's fallen. We talked about the stock and asked him about whether he watches the stock price.
Okay, so this is going to be very interesting. I've already seen the clip, but I would very much say that he does not watch the stock. He has much better things to focus on. But aside from that, we really haven't gotten any commentary from him on the stock. Not because it's the most important thing, especially as someone focusing on the long term of guiding this business to success, but I really think it's important, as I've mentioned on this channel, for hiring capabilities and employee morale. So let's see if that's covered.
Really, never.
But you must look at it, given what's happened, given the collapse. And I ask because I imagine that you have employees who are looking at that stock price, and that creates its own complication.
Let me explain. Let me just, first of all, Palantir's launched 5 of the most important products in the world, some of which are playing an active role in every part of your life, both in terms of disseminating COVID, vaccine, and lots of things we don't talk about. Every time we launch a product, people think we're idiots or crazy or insane. And very often, these products power the world. So I don't see going on a DPO any different than launching a product.
Now, this is very interesting. I can understand potentially a negative connotation here with using the stock as a product, as in selling it for a return, for a benefit, for cashing out on investors. I can really see it being taken that way. A more interesting angle here is actually what we've seen Palantir do with its own products, which is the parallel Alex Karp is using here, is they launch a product and it takes a while to get going. As with any complex system, it takes a while to get right, it takes a while to get going, and then they iterate on the product and they make it better over time. Let's see what else he has to say. That's my take.
We're in the very difficult times. Palantir is built for difficult times. Of course, I care what employees, investors are going through, but what they should care about, and what I care about is, where's the company going to be in a couple years? And let me tell you another thing about bad times. Our primary competition are startups invigorated by the hot, somewhat caustic and addictive fumes of loose venture dollars. Those companies are being cut off from the vapors of those fumes, and that affects my business much more than any stock price, meaning that I do not lose employees to these companies that are 2 days before they fail. The people that should come to Palantir and power a better world don't go to a startup that's going to essentially build consumer products that help none of us. So that's like a massive opportunity for Palantir.
Very interesting. He talks about Palantir as if it's not a startup, when really it isn't. You can think of anything like a startup if it helps you get in the right mindset. But what he's saying here is Palantir's competition in terms of the employee side. Alex Karp was talking here about all of these startups, software companies that need software engineers, really have only been competitive because of all the money sloshing around in the system. And now that a potential recession is here and the money is getting sucked out of the system by the Federal Reserve, quantitative tightening, all of that, these startups are going to have a much harder time. And that actually benefits Palantir because of a talent. Palantir is not a startup when it comes to a financial situation. It's one of the most successful companies in the world when you think about it. Doing $1 billion plus in revenue, having $2 billion in cash, 3,000 employees, like these are huge numbers. And there is safety in that financial situation. That's what Alex Karp is saying here. They will be able to eat up even more talent in a downturn.
He took the gloves off, no holding back about what he was speaking about there in terms of his views of Silicon Valley. I also asked Karp, though, about the perception of Palantir on Wall Street, and specifically a report by Morgan Stanley, an analyst there, that questioned whether Palantir should actually be valued as a true software company or a consulting firm.
Now, we've had this discussion for a long time. So long, in fact, that I almost forgot it even existed, this argument, because I was talking about this in November of 2020 almost. And it's very interesting that analysts are still using that, but it also demonstrates the misunderstanding of the product of the company. Not because necessarily the analysts aren't smart, but perhaps it might be a lack of Palantir's communication abilities. I'm not saying Palantir can't communicate effectively, because we've seen that they can, but I think it is definitely something the company needs to continue to work on. But anyways, I think this is very important that we get Alex Karp's view on this in terms of what analysts are thinking about the company. And keep in mind, I don't have it pulled up here, but Alex Karp actually used to run his own hedge fund, I believe. This is something almost no one knows, so keep that in mind when he is answering this question.
I know what they're going to say in 2 years. Why do I read them now?
That is very interesting. He keeps bringing up this whole 2 years idea. I think it's not because he thinks something is immediately happening within these 2 years, like there's a key catalyst. I think it's more because we'll go on to see what he says. But I think it is more about we're looking forward 2 years. That's what we're always looking for. Personally, I think Alex Karp is looking forward way beyond 2 years. But the 2 years is the time frame he's setting as an investor. Hey, look 2 years forward, discount that today. Let's see what's going on. It's like almost a very mini DCF in that regard.
What are they going to say in 2 years?
They're going to say, you know what? Palantir focused on building high-quality revenue. 60% of it comes from the only source that isn't going to go away.
Now, this is key. It seems like he's talking about 60% of it coming from the government. Now, why would he say 60%? I don't have the exact percentages right now, but it's been pretty split. The government's decelerating and the commercial is actually accelerating. And I wonder why he's saying 60% is going to come from the government. Very interesting. I think he's expecting much more governmental growth. You can't say that's a bad thing. It'll be very interesting to see where things end up. I will have to revise my numbers in the Palantir valuation model to make that be the case, but let's continue.
They make free cash flow off of that, and they've delivered 5 of the most interesting products in the world. By the way, they will then be writing about Apollo and our stuff on the edge and the military stuff we can't talk about, and our revenues will have increased, and in the end, it's a multiple on revenue.
It's very interesting because, once again, he's very adept in financials. Palantir actually launched one of its actual first commercial product was Palantir Finance. And what it allowed to do was Wall Street, any institution that needed financial information to do financial modeling or financial graphs or anything like that, really pull in all this data on financials and then make better insights and actual strategies going forward, be that trading, be that investing, anything in that regard. Now, moving even previous to that, as I mentioned, Alex Karp really knows what's going on in terms of the financial markets. So for him to actually say that Palantir will be throwing off free cash flow, he mentioned nothing about profitability. Let's say he's focusing on 2 years from today. So that would be, check the date, May 24th, 2024. 2 years from today, we'll say Palantir's released their Q1 2024 report, and they're now in their second quarter of 2024. He mentioned nothing about profitability, mentioned tremendous positive free cash flow, which he was talking about there. But then, most importantly, I believe, he talks about a multiple on revenue. Because even if Palantir did turn a profit, it would be almost break even at that point, if not slightly higher positive. So it really wouldn't be fair to give a multiple off of the profit, a price to earnings ratio, when Palantir is just turning profitable. Okay, so a multiple on revenue, very, very interesting. We know Palantir's multiple has gotten crushed, just along with the entire market, growth sector, software's unprofitable, if you want to throw Palantir in that category. We know all of those have gotten crushed. So there's been a serious multiple compression, but nevertheless, very interesting that Palantir, Alex Karp, are thinking about a potential revenue multiple to get a valuation in a couple years, and hopefully you'd think beyond that it turns into a price to earnings. I have all of this in my valuation model for Palantir, which you can find in the description if you want to play around with your own numbers. I've actually already thought about this. Price to sales, what would it be in 2024? What would that be based on the revenue? What would that be based on the shares outstanding? What would that be as a price target? All of that stuff. All right, let's keep going.
So what this Morgan Stanley analyst said is this is a company that should be considered a consulting company, not a software company. And that was in terms of what the multiple that should be applied to that company. How do you think about that?
Now, this is a very interesting question, right? Because it's the right question to ask if you're unsure. Because there is a huge difference in terms of a software multiple, because software, incredible, the highest gross margins you can practically find, very profitable once you get to scale, and everything like that. So that's the right question to be asking. Versus a consultancy, is that potentially a much lower multiple? Should we be applying that instead? Let's see what Alex Karp says, because first of all, I think that is wrong. I think it should not be a consultancy model. nor a consultancy actual multiple. But it is the right question to ask, and it's a great question because we need to answer this question correctly. Complete idiocy, he says.
That supplied the product that supplied your vaccine, which I'm sure he took, comes from us. The products that are involved in every war effort in the world come from us. We're working in environments I don't even know about, where my product is installed, no one has access. This is just like something that people believe. I'll tell you, this comes from when we build a product, we deploy it, and then we iterate to the point of product.
So just to bring that back to what he was saying about the stock almost being a product. And again, there is a negative connotation there in terms of the product being the stock instead of the actual product itself. Selling the stock on investors, and the investors are the ones losing the company, and the executives are the ones benefiting. But moving past that, because I really don't think that's the case, especially for this metaphor, he's talking about, let's rewind that back just one more second, or a couple seconds, in terms of what he says about iterating on products, just so we can close this up, so wrap this up one more time.
When we build a product, we deploy it, and then we iterate to the point of productivity.
He's talking about the real quality of these products. This is certainly not a consultancy. If you take any time to really think about it, it is a good question to be asking, because as an institutional investor, you want to prepare not just for the reality, but also the perception. So the perception could be, and I think it still is in some small regard, Palantir is a consultancy. So should we be using that multiple as a bear case, anything like that? There you have it from Alex Karp. I'll play some more clips at the end here if you're interested. Leave a like if you found my analysis insightful. And what do you think in the comments?
How do you think this ends?
I don't know. I believe, had Russia known that the combination of kinetic, hero, and operational use of data from edge, from wherever, things that we've been looking at for the last 15 years, had they understood that the impact of that is much greater, you would had a very different situation. And I'm deeply respectful of our adversaries. Like China and Russia are super interesting, super complicated, super sophisticated, highly competent cultures. They understand everything I'm saying, and they're metabolizing it.